Well, as we fast approach June 30, millions across the country will be rolling out the receipts and gearing up to lodge their tax returns, hoping for a big fat refund to provide just a little bit of financial relief.
And with the latest budget introducing major changes for the year ahead, how can we set ourselves up for the best possible outcome? Well, to tell us more, financial advisor, author and founder of Pivot Wealth, Ben Nash, joins us. Now, Ben, before we get to that, we've just had some breaking news out of Canberra.
Yes.
The Albanese government has backed down on some of those budget tax changes. It's just breaking now, so what can you tell us just at a top level?
So the details are just coming in, but essentially this is around the small business capital gains tax changes. So the new capital gains tax rules apply, and essentially there's a lot of, business owners that will end up paying a lot more tax as a result. What Anthony Albanese's announced is that they will increase the threshold. It is quite complex, this area, but essentially there's a threshold where if your business is at a certain size that they give you a 50% capital gains tax discount. Now, that has existed already historically, and so in the past you would get the standard 50% discount that applied up until these big budget announcements about all capital gains tax changes, and another 50% discount on top. Now they're just saying that you will have a higher threshold in order to access this 50% discount, but there is still a minimum tax rate applies of 30% on all gains that you get from selling a company. So it is definitely probably a step in the right direction, or a more favourable tax outcome for business owners, but it's definitely still much worse and higher tax than what it was historically.
Okay.
And still pretty complex at the same time.
Definitely.
All right, June 30 coming in hot. What should we be doing to be better prepared, or have we left it too late at this point?
Well, I think there's a window. The window is really small and it's closing quite quickly, but making sure that you understand the things that you can be claiming, looking for your records to make sure that you're making the most of that. There is still an opportunity to get some deductions in before the end of the financial year. If you need to buy any things that would be tax deductible, having them land before 30 June rather than after means that you get the tax deduction and the tax refund a full year sooner. And there's also a window around super contributions, but check with your fund because a lot of those need to happen before the end of the financial year for you to be able to claim the deduction.
What are some of the biggest mistakes people make at tax time?
I think not keeping good records is a big one. A lot of people leave a lot of money on the table because they just don't keep the records. But it's also missing things like the motor vehicle deductions, work from home expenses, and self-education and advice expenses. They're probably the three biggest claim areas, and still areas where people don't claim as much as they should. There's another one around the no receipt deductions, which everyone can claim. You can claim up to $300 without keeping receipts, but sometimes people think that's just a free-for-all, that you do need to actually be able to answer the questions if the ATO asks.
Just on that, is there a new $1,000 thing, no questions asked?
Yeah, so that's one of the new tax changes that's been announced.
Is that instead of $300?
So, no, that's two separate elements.
Okay.
Yeah, Kylie.
Oh, I'm sorry.
Yeah, I know. There's a lot there.
What's the $1,000 thing? Because that sounds quite good.
Yeah, so everyone can claim $1,000 and basically not need to justify it. That's a floor, though, not a ceiling. So if your actual deductions are above $1,000, then you can claim the higher amount, but you just need to have all of the records to come along with that. So that plus the 1% lower tax rate on income earned between $18,000 and $45,000, they're two of the positive tax changes that have managed to come out of this year's budget. The actual amount of money that you get from that is not huge, but it all helps, particularly with where we're at today.
People see July 1 as this big brick wall that we're running towards and we're going to hit, but you're saying if all your ducks aren't in a row, you're better off taking a little more time, right?
Well, there's an obligation on you when you lodge your tax return to make sure that it's complete and accurate, and no doubt there'll be a lot of people that are trying to get their tax refund and get it back into their bank account, but on the 1st of July, you're probably not going to have things like statements from your finance providers around interest. You might not have any statements from investments, any government payments and those sorts of things that typically take a couple of weeks. Some of them take even a little bit longer to come through. So you want to make sure you've got all of that information so that you get it right the first time and get everything back.
So it can be a week or 2 or 3 after July 1, it's still okay?
Absolutely.
Question without notice.
Yeah.
We have the working from home thing happening there. Would you advise caution about people trying to claim the 5th bedroom as part of their mortgage, and do you know what I mean?
Yeah.
That can get into difficulty if down the track you're looking to sell your house, because effectively that fourth bedroom, whatever it is.
Yes. Yeah, it does get a little bit complicated in that when you're claiming tax deductions for that, then it can factor into your capital gains tax calculations on your own home. If you're renting, it's a little bit cleaner. But either way, you want to make sure that you really understand the rules, because this is something the ATO is looking at, and making sure that it lines up with what your work hours actually are from home as well, because the ATO know that more people are working from the office, but a lot of people are still claiming like it's 2022.
Okay.
Yeah, is that a bit of a red flag thing for the tax office this year? Okay.
I'm going to ask you this quickly, knowing full well that no one watching will do it on July 2, but is there anything we can start early in this process to make it easier for this time next year?
Well, I think July and even this time of June is the perfect time to be planning for the year ahead. We said that there's a small window for you to act in, but if you're acting now for next financial year, then you've got more time to make some moves that will actually be able to happen throughout the year. So if you're being tax smarter with your investments, if you're putting potentially some deductible debt strategies in place, if you're doing even salary sacrifice to your super fund, you can spread it out over the course of the year, and then you're getting tax benefits across multiple months without you having to hustle or burn through all of the cash that you've got in your bank account.
Good advice as always, mate. Thank you very much for that.
Good advice, which we'll think we should have done.
Yeah, last year.
Thanks.
Good on you for a 5-bedroom house. Well done. Go you.
I don't have a 5-bedroom house.
Impressive.